Good evening, ladies and gentlemen. Welcome to Digital Goat Academy, guys. I'm your host, the Digital Goat himself, guys. It is 9:12 p.m. Eastern Time, January 31st. Is it the 31st? Let me make sure it's the 31st. Where's my calendar? Yeah, 31st, Tuesday. Like I said, 9:12 p.m. guys. I am super late for this class. Well, 12 minutes late, guys. So I do apologize, but I had a sediment or a section that I was going to go over today, which was going to be my Sunday candle. But I'm actually going to change it up, guys, and we're just going to focus on what the market is actually showing us today, and then just give you guys what I was looking at overall for some of the currency pairs that I was looking to trade, and then we're just going to base our time together off of that. Now, guys, if you look, well, let me change this thing back because it is on the wrong chart section. Hold on, guys, and I hope everyone can hear me clearly out there. Let me make sure it's showing my screen. Yeah, that was my screen. My bad, guys. I'm on my iPad today, so that is why I'm having these difficulties. Microphone on. Yeah, our microphone's on. Okay, so let's look at Euro GBP. I actually was looking at that. I believe Sunday, which is crazy, guys. Anybody that follows me, definitely thank you for your support. Please hit the like button. Please subscribe, guys, if you find value in this channel, and definitely hit the notification bell so you can stay up to date on my content. But man, guys, I had some important information that I didn't record because I am using Zoom. So I'll actually double up on one of my videos this week, guys, just because I didn't give out my weekly outlook. Well, I did, but I didn't record it. Shame on me, right? But I'll get you guys all, pretty much squared away as we move forward. So Euro GBP, guys, this is what I was looking at, and I illustrated to my community. I believe that we're in a bear market where Euro GBP, that is the euro against the British pound, guys. So if you see right here, I drew up resistance. We were actually selling at a lower position. It did, go in profit. I think we made like 20 pips off of it, or maybe came shy of it. And I saw a possible reversal. I was able to spot the reversal before the market actually came up and hit our stop losses. And I think that that's a valuable technique, guys, or a valuable thing for most traders to be able to spot, not necessarily a reversal every time, but like when your trade has been fully exhausted. But we'll go into that a little bit later, guys. But like I said, daily time frame. Well, let me branch out to the weekly. So just overall on the weekly time frame, when you look at Euro GBP, you'll see that you'll probably notice, guys, that over here you have this bearish engulfing candle, right? Now, this is a selling candle. If you see, my selling candles are pretty much purple. My buying candles are gray. This is a selling candle. Now, normally what you would look at this when you see a bullish or a bearish engulfing, guys, price retest that probably 100% of that market. Normally, when you have a bullish engulfing, price could retest 100%. If not, it could retest higher than that or equal to it. If you see in this area right here, let me kind of zoom in. Where this wick is at, what day is that? Monday. So Monday's high, right? This is Monday's high. Monday's high actually retested this market. Let's see live, guys, right? I'm just drawing my fib on it. Retested at 786. Well, let me get rid of all this that y'all don't need to see, right? All that stuff is done. But 786%, 786% of that market, which is a high level reversal zone, guys. So indicating that because it rejected away from it, a possible sell is ensuing, right? Now, when you look at it, guys, look how the market, it closed bullish, in fact. It did close bullish, but so that lets you know that we needed to retest even more. And this market had already retested pretty much 618 of this weekly candle, right? So we're in a new week. The market shot up from, was it this week? Monday. This was Monday last week. No, the week. Yeah, this was Monday last week. Yeah, Monday last week, right? So starting off this week, we were bullish, or pretty much from the prior week, we were bullish. We sold down, popped up. Now we're at 61% of this candle, this daily move right here. I know you see, guys, this is like, a shooting star, or, whatever candle it as, guys. You could just say doji, but this is, in fact, the proper name is a shooting star, which means that, inverted hammer, my bad. Inverted hammer, which could signify bullish momentum. But guys, right here, we have the market getting away from this super strong in 1 week, a big move in 1 week. I would believe that price would actually recover a percentage of it. We're at 618, and then continue falling down on pretty much after price action starts moving the market, guys, right? Makes sense, right? Pretty straightforward. So with Euro GBP, I am looking for it to continue bearish. We'll just see what the market does overall, but definitely showing a lot of rejection up here at the top. If you guys see, kind of showing that it's trying to sell right now. But if you see rejection at the top, how do I know there's rejection at the top? Follow these wicks, right? You got 1, 2, 3 rejection. Not saying that there's not liquidity up here, but if you break it down to a smaller time frame, you'll start spotting certain candles, certain candle patterns that'll help you decipher what the market is actually doing, or what it could potentially be doing prior to that. Now, if you look right here, guys, simple math, breakdown here, retest. Definitely, if we see this market continue to push down, we know that clearly we're in a bearish market up into a certain point, guys. So the exhaustion will probably come at the previous high. Let me look at this. Well, we have consolidation right here. So naturally, for me, if the market is still bullish from here, it would want to attack this consolidation, guys. As consolidation are high level areas that the market is actually going to return to. You don't know when, but say that we were waiting for the buy here. Say the buy is still valid. This area specifically, because we turn it to a line chart. Let me see. We turn it to a line chart, box that in, bring it all the way out. Where's my, yeah. Bring it all the way out. We can see that this is a zone that the market could potentially return to. Do we know if it's going to break through that? I don't know, guys, but I know that when it comes to consolidation, the market will definitely try to return to consolidation and then move up in its area. Right here, we do look like we have a clear downtrend moving on, guys. If you just look at it, looks like a clear downtrend. So you see, I even drew these gold zones to kind of configure basically higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? You see the sequence? So as long as we maintain below the 618, and even if it does create resistance up here, as long as really we maintain below the 786, we are bearish, but I'm currently actively in a trade. So I definitely wanted to stay below the 618, guys, and not return to the 786. But if we do, we could still actually validate that the market is still bearish until it decides to push higher. So just because we may have a higher push potentially, but that's why I would say, guys, the market will probably try to attack this level of consolidation here that we know is on, what time frame did we discover that? That is on the hour time frame, anywhere from like the hour to 2 hour, because I don't think 3 hours. So 2 hours to like 45 minutes. Let me see what it looks like on the 45 minute. Yeah, clear as day on the 45 minutes. So 2 hours to 45 minutes. We know that could potentially be a buy entry if the market is bullish, but obviously I would have to, look at the market news with basically this liquidity down here. I can see it going past that, but if you're just looking as far as areas to exit out of the market, I would like this area. Let me see how many pips that is from this current entry, because I like this move. Oh, what did I do? So from currently where we're at 88192, right? 88192 is price action. Basically, that aligns with what I've been talking about if you've been following my channel. Guys, 25, 30 pips consistently or consecutively. Continuously doing that, man, I said a lot of C words there, but continuously doing that, guys, you'll start making the profit versus trying to hold trades, you know, for swing trades and stuff. Don't get me wrong, the market does snap in our favor like that. But I promise you, because of the way the market retesting anywhere from 25 to 30 pips, you want to be in an area of that. So, you know, 25, 40 pips, look for another 25, 40 pips until you get the breakout that just goes like, you know, 100 pips for like one daily candle or 1 4-hour candle. You guys know how this stuff works, right? So yeah, I am looking at bearish pressure right there. I haven't looked at news today. Matter of fact, let me do that on my phone. I have my phone with me, so let me look at to see what type of news we have while I go to something else. So that's Euro GBP. That's what I was looking at for that, guys. NZD USD. I know. Did we talk about this yesterday? It's clearly selling. I actually got out, guys. So what I want to advocate is that, you know, I know a lot of people out there may not actually respect the idea of like trend lines. I know that was a big talk in the community amongst traders, guys, that, you know, not really, hey man, there's no such thing as support and resistance. Your trend line is bullshit and blah, blah, blah. I disagree, guys. This is the only type of data that we have that, yes, it's imaginary, but these support structures, such as this uptrend, that support right here that I have highlighted in green, and then you see my support zones and stuff, right? We still need that because even though it's imaginary or whatnot, those are areas that the banks are primarily looking at, and they still use that basic fundamentals of trading or, you know, investing period, guys, or chart reading. Let's say the basic fundamentals of chart reading to make a calculated decision and use the information they taught us at certain times to actually make the market react like that. It is up to you to spot that and trust in what you see, guys. So if you see that you drew a trend line. So I drew this trend line prior to this break. Actually, my trend line was like all the way back here, guys. So it was like down here, and I extended it to match with what I was seeing, right? You following me? So I extended it to match with what I was seeing to see if price broke below my zone, right? This was the break. Now, here's the thing. This was the break of our zone. Price will probably, based off momentum, let's look at a Hakanashi. Based off momentum, price should continue downward, definitely to the next level of support, which should probably be here. I'm pretty confident this is going to be our next level of support. This is actually where support is at. And if you're confused about that, just turn it to a line chart and see where the last level of structure or the last dip or the last spike was. You know what I'm saying? If it's a dip, you're looking for buys. If it's a spike, you're looking for sells. Obviously, this is like a spike. This is a dip. Makes sense, guys? So I can see it returning here, and then we would have to figure out what the market can do after that, which I do believe it will still continue bullish. Now, here's the thing, guys. Break, retest. Follow that basic logic of trading and don't get the one caught with your pants down because it's like, I see the potential. This market will probably most likely pull up, and when it does, it will be higher than this position. Because if you extend your imaginary, now this is not saying that price is going to hit here exactly and then pop off. It could break above this a little bit more, but at least we still have this as a reference point, right? So if you extend it farther, you can have a scenario like this. Let me see if my tool is available. Oh, right here. My handy dandy brush, guys. So we can say that price could potentially do one of these numbers. Now, this is at the point where people will believe that price is bullish. And they will believe that because they saw that this is where it's like you have to follow these sequences that the market does. One, you have to identify if we're in a high point or if we're in a low point in the market. Now, again, guys, everything's subjective. So even what I'm illustrating could be completely false and the market is completely bullish, or the market actually never comes back up here. But based off of what I'm seeing, we do need a retest. 9 times out of 10, this is consolidation grabbing order. What am I trying to say? Generating orders. I don't know why I was stuck with that. So generating orders. When you see consolidation, generating orders, this whole move right here, this is still consolidation where this spike happened, this low point, and the market never decided what it wanted to do until it broke out of here. This is still consolidation. It's generating orders in order to sweep it on the opposite side, guys. That's not necessarily saying that the sweep is a bull move, but it's going to sweep it eventually, right? It's going to come back up here and collect all this money it gave out because these were buyers and sellers both in the market, you know, until somebody got more dominant, which is the bearish, which is the sellers, guys, right? So I can see price coming up here. Now, here's where people get messed up because they're like, oh, yeah, man, break, retest. That's the fundamentals of the market. But understand the banks are, the market makers and the banks are expecting that. They are literally expecting you to follow the protocol instead of actually doing a little bit more digging and understanding that, okay, we were bearish, but if I'm bearish, I still have to be bearish when it retests higher, right? So it could potentially break out of this trend line, which it already did. I drew this trend line before the break happened. So I have my data on the break, right? Even if I didn't get in on this, I have my data on the break. We're bearish. Now I have to wait for my retest, which will probably be a little bit higher because more than likely, if I go back to a line chart, it'll have wicks and stuff. Yes, wicks are liquidity zones where the market can sweep. And then what you can have happen is this scenario, because what it did was trap buyers and having them believe this. Buyers will believe this, right? Buyers are like, oh man, break, retest, dude, man, we are good to go, yo. We are good. This is what buyers think, right? That's what the trader is gonna think, because you see my red zone. If you see my red zone, guys, you'll see that that's a level of structure that the market could retest. Now, it could do this scenario just like that potentially, but this is what I'm trying to illustrate, guys. More than likely, and I'm not saying in this exact sequence, more than likely where people think this is the buy zone, this is the continuous sell zone. You see what I'm saying? Because it makes sense to trap everybody who believes that it's going to sell right here. You should never think that, unless it's on a higher time frame, that price is buying or selling from consolidation without a retest, right? So there's no retest. So if it is selling, we need a retest back up here. But more than likely, because we have liquidity, the market will actually rise higher, bringing it down, bringing NZD USD down. I mean, bringing the New Zealand dollar down against the United States dollar. Now, guys, I did talk about, man, y'all, I messed it up because everybody would have been following along had they followed that I was talking that the dollar was still bullish. I believe that the dollar is starting to show some bullish momentum to the upside. And excuse me for like my charts being like this, but guys, you know, obviously I'm a trader as well, so I'm gonna have my chart fitted to the way I need it to be. Now, what I did for you guys yesterday that I didn't record is I basically said that price needs to break out of this purple zone. It was like, I think we were up here, and what happened was the market came down, and we were actually trading USD JPY, and the market actually went against me. I actually put a pending order down there, a limit, and it actually shot down. Matter of fact, let me just show you guys in person, and then we'll come back to the dollar so you can make sense of it, right? All right, so last night I gave buy. I wanted a break. Right? So I wanted a break out of the zone. And from that break, what I wanted price to do was retest pretty much this entry, right? So I saw it right here. It broke. It did, in fact, break. This is what I'm talking about, right? So let me actually show you. Where is my rewind button? Where's my rewind button? Can I make this up, guys? So it, in fact, broke. Like, it broke our structure. Clear as day. Like, you know what I mean? Like, oh my gosh, like really should have taken the trade off of this initial move, yo. But what ended up happening is that, as you guys will see, that the market went completely against me. So I saw it selling, but I'm like, retest, retest back to the level of structure, what we're all taught, back to the level or the previous high that it should respect if it's an uptrend, right? Guess what that market did to me? And you guys are going to see, right? And this is why I'm trying to illustrate what I was showing you guys off of NZD USD, right? This is what I'm trying to illustrate. Look how the market straight went again. Didn't even like straight picked up my order and said, give me all that money, just because, one, I wasn't being aware. So anybody can say, well, you didn't see that level of support. Everybody's going to say that they have the answer to like trading, guys. It's not that simple. You're going to make mistakes or whatnot. But If you had already planned, I did plan. Here's the thing. Now, USD JPY took us out then, right? It did in the same night, took us out. Now, what I did, I already had the dollar pretty much drawn up, right? I had already said that price needs to remain above this line to be valid, right? And I think from that sequence of how do I do this? How do I end the okay? So we were like somewhere, yeah, we were over here when price did this. Maybe a little bit further back. Yeah. So based off the dollar, I had drawn up this, I had pretty much drawn up this gap in the market, guys. That's why I circled it. There's a gap in the market. The market did, in fact, respect the gap, at least 50% of it. So it's previous high, right? So the market shot up completely from that. And I started saying that these these purple lines, they're potential zones that the market could potentially be breaking out of, right? So the market actually responded well to us, giving us what we needed to see. You know, it did its retest. I didn't catch this part. This is the part, like pretty much in this area. This is where I was confident that the dollar was bullish, right? Let me show you what happened. But even though I had this zone and I expected USD JPY to pretty much be bullish from here, I still had this marked up. So it actually assisted me, guys. So look, came down. So pretty much this move up here is what brought down USD JPY. No, matter of fact, this move right here. This was the move. This move brought down this selling move right here. This brought down USD JPY to that area, which pretty much grabbed my stop loss, and then it shot down a little bit more for like 100% of like that 4-hour candle, and then it got bullish from there, guys. So look at this. But what I'm trying to say is that because I already marked up the dollar and it was remaining bullish and it came down to this area, one, to create support, should have spotted that, right? Should have, would have, could have, but it created support, guys. And I was able to pretty much use this information to jump back in USD JPY, and we still had our entry. I'm talking about like we could have jumped back in it like 4 or 5 times, to be completely honest, right? 4 or 5 times. I had actually saw that it came down here. I bought pretty much from this low position back up to my stop loss, just for the market to come back up to our original entry, give us our original, well, one, it shot up from here. So even if you'd have got the original entry, you would have got 55 pips. Then the market came down, and then it gave us another 25 pips earlier today, just to retest and possibly give us the entire move. So you would have had 4 to maybe 5 times that you really could have re-entered in this market because you were prepared. You know what I'm saying? Like you were prepared. You were in the future already versus, oh man, I'm marking this up. You always give yourself room to breathe. You never allow yourself to say the market can't go lower or the market can't go higher. I've been with that crowd, guys, that have said like, man, the market, it just can't do this. The market will show you how bigger it is than all of us, guys. So please adhere to that advice. This is pretty much it. So I am bullish on the dollar. You guys can use this information. I know we were looking at gold. Yeah, looking at a sell for gold. Gold is showing exactly what I want to see. So this dollar is turning upside down for you guys out there. So definitely check in. I'm just keeping this short just because I'm behind, but I'm gonna make up for it in the next tomorrow and the day after that, guys. So tune in tomorrow to today's Tuesday, right? Yeah. Tune in tomorrow to Digital Wednesdays at 7 p.m. Eastern time, guys. So that's what I'll be doing tomorrow. That will actually be live trading versus education. I know you guys are seeing education. So if you're unfamiliar with trading in its entirety, reach out to me, because clearly what I'm showing you off of TradingView, it's not registering. And I understand that, guys, because I haven't decided to pull up my actual live chart yet to show you guys real-time data and things like that off of like MetaTrader 4. But understand, this information is still just as good, because all you're going to do is plug this information in to your MetaTrader 4, right? But if you are if you are experienced, obviously use this information to your benefit. But anyway, guys, I have a free private Discord. It won't be free forever. So if you guys are interested in trading, if you guys want a community to join, definitely reach out to me at digital at the digital underscore goat for my IG. Let me actually type that out for you guys, all right? Instead of just saying it. Where is our text? So I have two IGs for you guys, right? First one is at the digital, and this is an underscore go. And my other business page is this digital Goatz. That's what we are. That's our company. That's our brand, Digital Goatz. You want to reach out to me on Facebook? Same thing, guys. Just type in, where is Digital Goatz. So those are two platforms that you guys can reach out to me on. Message me if you're trying to get into the free Discord while it's still free, guys. Definitely reach out to me. I'm really trying to grow community. I'm really trying to assert myself and build my reputation, but also help traders. And I think that this skill set is better with the community than an individual. You can trade by yourself, knock yourself out. But what I can tell you is that primarily my gains and wins and my progression has come with the team, with the family that's orientated to my same goals, guys. So appreciate everyone that supports me. Appreciate everyone that showed up today. Well, obviously you guys are seeing the video, but not on Zoom. But anyway, appreciate everybody that shows up every Wednesday and everybody that views my videos when they have the leisure. So again, guys, as always, hit that like button, hit that subscribe button. Appreciate you guys as always. Hit that notification bell to stay up to date on all my content. And as always, guys, see you at the top, because this year and here on out, we are taking everybody to the top with us. Thank you, guys. See you guys tomorrow at 7 p.m. Eastern Time.